Hey everyone, Warren Buffett, the Oracle of Omaha, has an uncanny ability to pick great companies at great prices and see those share prices rise over time. Now, in this video, I'm going to bring to you one Warren Buffett growth stock that I think is a screaming buy in 2024. So let's jump right in. Let's see what that stock is.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the stock that I'm talking about in this video is Amazon. Amazon. And the reason why I think Amazon is an excellent stock to buy heading into 2024 has a lot to do with what Amazon did in 2020 and in 2021 and in 2022. You see, Amazon's business was absolutely booming as a result of the pandemic. Absolutely booming. The company experienced a surge in business that was unprecedented in its history. And so, to deal with that level of demand, Amazon invested in its logistics. It increased the number of warehouses, the number of vans, trucks, planes, etc., to be able to fulfill that level of consumer demand. Well, what happened following that surge in spending was Amazon's profitability collapsed. It collapsed because it overspent to serve customers. It overshot. And management said, like, they were honest. They said, you know what? This surge was unprecedented. We didn't know how to respond. And we said, you know what? If we're going to make a mistake, let's make a mistake on the side of overserving our customers instead of underserving our customers, right? Because we can still grow into that if we overinvest. And that's precisely what they've been doing. They overinvested, and now that growth has returned, Amazon is utilizing those investments that it made, and this revenue growth is leading to phenomenal profit growth. And management said that there's a lot more room to go with this revenue growth leading to profit growth. So let me demonstrate to you what's been happening. So here we have Amazon's North America segment. It's one of its three segments, okay? Net sales, right, was up 11% year over year, but look at that surge in profitability in the third quarter of 2023, up to 4.3 billion from a loss of 400 million in the same quarter the prior year. So a mere 11% revenue growth led to this kind of surge in profit growth. Let me show you, and you can see that trend throughout, right? Look at how it's just climbed higher and higher. So the next segment it reports on is its international segment, which is essentially the same e-commerce segment, but instead of in North America, we were just looking at now it's international, and we see a similar story. Look at this trend upward. Now, the revenue was up 16% and the operating loss was 95 million. Now, this segment is not yet profitable, but it demonstrated the similar improvement with an 16% revenue growth leading to over 2 billion of improvement in operating income. So this segment too is demonstrating that kind of phenomenal growth. Now, all estimates indicate that e-commerce spending as a percentage of total spending is expected to grow for the foreseeable future. In fact, let me share with you the total addressable market for e-commerce. According to Statista, the total e-commerce spending in the United States came in at over $1 trillion in 2022. That figure is estimated to grow to nearly 1.5 trillion by 2027. Surprisingly, in 2022, when total spending was over $1 trillion, it represented just 14.6% of total sales. Total retail sales surpassed 7 trillion in 2022. Of course, e-commerce is more convenient than shopping in person. It's understandable that the industry will grow to a larger share of overall spending in the next several years. In fact, the industry will likely continue to expand beyond 2027. Don't get me wrong, e-commerce sales will never be 100% of the total, but it wouldn't surprise me if it grew to be larger than 50% by 2040. Now, several companies will benefit from this trend like Amazon, Shopify, Etsy, and eBay, to name a few. Even financial transaction facilitators like Visa, MasterCard, and PayPal will capitalize from a greater percentage of shopping happening in forms where cash payments are not an option. That being said, with Amazon delivering this kind of operating improvement on even relatively non-significant revenue growth, you can imagine the potential for profitability over the next few years for Amazon. Finally, I want to share with you its AWS segment, its most profitable segment. And even this segment is demonstrating excellent growth with 12% revenue growth, leading to an over 1.5 billion increase in operating income. This segment is already phenomenally profitable at a 30% operating profit margin. So any growth here is going to lead to a meaningful increase in operating income. The good news with this segment is Amazon said that customers are starting to increase their spending with AWS again after a few quarters of slowing down. But let's look longer term at Amazon and how it's performed. So you could see Amazon's total trailing 12-month revenue here going back to 2019, increasing from about 250 billion to 554 billion. In other words, they've grown their revenue by $300 billion. Most businesses in the world will never reach sales of 300 billion in their lifetime. Amazon has grown by 300 billion in 5 years. Just phenomenal performance. And that has led to solid cash flow from operations growth. Trailing 12-month cash flow from operations has grown from around 30 billion, which is an incredible number to begin with, all the way up to 71.65 billion. And this number is rising quickly for the factor I mentioned in the beginning of the video. The overinvestment, you can see that here, the downward trend in cash flow from operations. This is when I got worried about Amazon and was considering if they would ever turn things around or if they just have too large of an expense base to serve customers. And Amazon delivered on point, turning this around by a wide margin and reaching a level of cash flow from operations that's even above the pandemic era profit levels, the pandemic era cash flow levels. So it's even doing better now than it was during the peak moments of the pandemic when we were spending all our money while we were at home. So excellent demonstration of this challenge. And finally, Amazon has been improving its operating profit margin over the years as well. Again, you can see the effects of that overinvestment here with a big drop down in its operating profit margin, but that too is recovering and moving higher. And as I showed you with its operating income growing significantly with just small increases in revenue, I wouldn't be surprised if this number surpasses 6% again in 2024. Amazon stock is trading at a forward price to earnings of 43.95, and while that's not cheap, it's about double the price of the average stock in the S&P 500 according to this metric. I think Amazon deserves this premium valuation because not only has Amazon increased its earnings per share phenomenally over the last 6 years or so, or you can even go back further, but here's what analysts expect from Amazon over the next 2 years. Revenue growth of 11% in fiscal year 2024 with 33% earnings per share growth. In 2025, it's more of the same with 11.7% revenue growth leading to 36% earnings per share growth. So earnings per share is going to accelerate over the next 2 years for Amazon. And so for that reason and the others I discussed in this video, I think Amazon is one Warren Buffett growth stock that is an excellent buy for 2024. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.